Hello guys, how are you doing? Welcome to another video. Today we are going to continue with the IF episodes. We're already on episode, we did episode 2 already, so here we have episode 3, which is the order block theory. We already talked about the BC and the CB. If you haven't watched the video, the link will be on the description below. Okay, so we're going to continue with this one today. And just a quick reminder, like I used to say, IF here is simply just to make you understand where price is going, why price is going to that particular area. Okay, and I mean all the reasons why price should be shifting to a particular direction. So when you are able to identify why price is going to this particular area, and then now what do we need to do will be to step down to smaller time frames, try to see internal range liquidity that the market will grab before heading to that area. Okay, because normally the market books from internal range liquidity to external range liquidity and vice versa. That is how the market books, right? There's no other way. The market grabs liquidity to another liquidity, from liquidity to liquidity, internal range to external range liquidity. Like in the previous episode, we talked about the BC and the CB. Okay, when the market is heading for external range liquidity, for example, the market is coming down for this low here. Okay, we have sell stops here. All right, sell side liquidity. So if the market is coming down to this area, likely there's going to be internal range liquidity that the market has to grab, right? So you notice that the market came back up to balance this CB here that was created. You see how the market went to the CB and then came down to clear this external range liquidity. So at this level, here is the internal range liquidity that the market came back to rebalance or to grab before heading for the external range liquidity. And what happened when it took the external range liquidity, the job was completed. All right, the market has now to go back to another external range liquidity. So with your IOF now, you'll be able to determine okay, as price has taken this liquidity, which one is next. All right, which liquidity area is next. And when you ask these questions to yourself, you are going to look back in time. All right, you look at previous price action, you see an area like this is inefficient. All right, you see price here was one-sided, only selling pressure was here. So this area has a draw in liquidity, price needs to rebalance it. Okay, and when you look, you will see that roughly at the center of it here we have a CB again. Right, you see how price came to it and then it gave a pullback and then it continued to rebalance right up to the other block here. So this an area after price took this liquidity here, after price took this CSI liquidity, you will know that okay, this is another draw, right? And at this point now, you start looking for your buying opportunities, whether you're using patterns to trade or whatsoever kind of model setups that you're using. You'll start looking at it here to head into this inefficiency and rebalance it to clear this buy side liquidity here and then right up to the inefficiency. Okay, so today we are going to be talking about order blocks theory. What is an order block, how to use it when you identify your IOF. All right, now most of you that are smart money traders, you have noticed that so many order blocks now are not working. Right now, if you take an order block that is against your IOF, it's not going to work. All right, it's never going to work. That's a mistake smart money people are doing, and they're wondering why other blocks are not working and so on. Now, some people will know that, okay, this is a bearish order block. Quite all right, this is a bearish order block, all right? This is a very good bearish order block, this candle here. Okay, now let me just give you the definition. An order block, when I talk about the bullish order block, it's just vice versa to a bearish order block. So try it so that we can save time, right? So a bullish order block is the last down candle, right? It's the last down candle with the biggest range, a last close down candle, right? Which means that if the market is going down, all right, the last down candle here is going to be a bullish order block. And now, where do you define this bullish order block? There are things to confirm if the bullish order block is going to be a good one or not, right? And then the first thing is it should be around a support level. it should be around a support level. All right, it should be around, let's say, a level of demand or a level of supply in the opposite side. Okay, so when the market is dropping and you see the last down candle, right, being around a support level, the last close candle, the last down close candle, because this is a bearish candle here and the close is down, right? So when you're talking about a bullish order block, the last up close candle with a big range, okay, if you notice I'm talking about a big range here, right, you will know that in a very bearish order block, you are looking at the bullish last up close candle. All right, the last up closed candle is your bearish order block, and in a bullish order block, it is the last close down candle, the last down close candle, right, in an area of support or an area of resistance. Now, this here is a bullish order block. Okay, that's a bullish order block that you have there. Do I have that here? Okay, that's a bullish order block that we have here. And then down here, I won't take this one as a bullish order block, but actually it is an order block, but I'll give you reasons why it did not hold price. Okay, you see how price reacted to it, but it did not hold price. Why didn't it hold price? Because price was heading for liquidity. Okay, now after this happened, this is like an area of support, right? So if you look around this area of support, which down last close candle can you see? There is this one here, okay, with a big range. I think you can see that. So you see how price left from it, went back, came to retest it, and then it bought right up to the inefficiency above. So at this level, this is the last down close candle. This is our bullish order block here, right? That's our bullish order block candle. So just like a quick reminder again, that's a bullish order block. A bullish order block is the last down close candle, right, before a rally up. All right, and then now a bearish order block is the last up close candle before a rally down. All right, and now there are so many things to confirm if the order block is strong or not. Let me just illustrate it here. Now, if the market is going up, if you're having a bullish market is heading up and then suddenly it breaks structure, right? When it breaks structure, not giving you a signal that you are changing the direction. The market is shifting from an uptrend to a downtrend. So what you're going to do next is to look for the last up close candle here, right? The last up close candle here is going to be a bearish order block, and you'll be expecting price to come back to it and mitigate, and then it drops. All right, I don't want to go too deep into why we are calling it an order block, or I mean, so that it shouldn't complicate most of us, right? That could be in a different video to look at it so deeply, why price will be coming back specifically to the order block and so on. So just to make you understand that the bearish order block here is the last up close candle, and in a down move, when price breaks structure, you identify the last down close candle here, it's going to be a bullish order block, and that's where you can take your entry from. Okay, even if the market is dropping down, if the market is in a downtrend and once it gives a pullback like this and then it drops, breaking structure, the last up close candle inside this pullback here is going to be your bearish order block, and you can take an entry from there. Okay, I think by now you must have understood what I mean by a bearish order block. Now, there are so many other blocks that will not work, like I said, because they are against the IOF. If you look on my screen, you will discover that I say IOF is the king. All right, that's how I trade. All right, I know that if the market is supposed to go up, no bearish order block is going to stop price from going up. If the market wants to go down, no bullish order block will stop price from going down, right? Remember I said, now, after this order block, you see a price moved up rapidly, move up, move up, move up, breaking structures and so on. But this didn't confirm that it's a strong order block. Why? Because price had something to do here. All right, we had some sell side liquidity here that was supposed to be taken. So price have to come and then clear it. All right, once it clears it now, and then it starts being bullish. When the market starts, when your IOF changes from bearish to bullish, at that moment you have to just be looking for bullish order blocks. All right, bullish order blocks and fair value gaps to be filled. All right, now for example here, I would have taken this trade after price left this other block here and it broke structure, broke structure. When price came back to the other block zone, I'll be selling here and my target will be this low, right? My target will be this low. At this point, our IF is still very much bearish. Our IF is bearish. So any counter trend setup is going to be an inducement. Price is just going to clear a stop loss. Those are trading trend line. You draw trend line to trade, it's going to clear you out, right? Why? Because the IF here is bearish. Price is looking for liquidity down, and until it takes the liquidity, whatsoever thing that you're looking for here is not going to hold, right? So that is very, very important. You should not look for a bullish order block to support price while where IUF is bearish. Okay, it's not going to work. It's not going to work. So now, with that explanation, we are going to go deeper now, right? Like I said, if your market is bullish, you only look for bullish order blocks. When the market is bullish, you only look for bullish order blocks. Like I've just given this example here. This is a good bearish order block. After from here, price drop drastically down, even breaking structures. So a lot of people will be selling here. A lot of people will be selling from this area. And what happened? Price just smashed through it with just one full candle, and then it went directly up. All right. But from this case now, you should have been in a buy trade already. Okay, you should have been in a buy trade from this other block. Remember the definition I gave: the last down close candle in an area of a support. All right, in a strong level like this, in a strong zone like this. Okay, and then this one again. This is another bearish, a bullish order block again. You see how price came back to it nicely, and then it went continue pushing up. All right, and then here again we had a volume imbalance. We had a volume imbalance that was created by these two candles. See, this came back in and then traded. I'm not going to be talking about volume imbalance. That's going to be a lesson for a different day. All right, that's going to be a lesson for a different day. Price here again came down to rebalance this BC here, right? This is a BC. Why? Because price is respecting any bullish PD array. Okay, price is going to be respecting all the bullish PD arrays. Why? Because price is seeking for buy side liquidity. Price is seeking for buy side liquidity, and any sell setup is going to be a scam. All right, it's going to be a fake one. Price is not going to respect. So all these are entry opportunities to you until you see price break structure and start to go down. All right, until you see price break structure and start to go down. Now, how do you determine your other blocks? You determine your other blocks from higher time frames. Okay, from higher time frames, you look at the monthly, you look at the monthly chart, you look at the weekly chart and the daily. All right, those are the higher time frames that I personally I mark out my other blocks from. Going down to smaller time frames, even if you're a day trader, it's going to bring going to be a lot of confusion. All right, there's going to be a lot of mixed candles up and down just to uh, that is just to induce you to taking wrong sides of the other blocks. Even if you're a scalper, always try to look at what the higher time frame is doing. All right, the video on the IF is very, very important. You have to rewatch it. Okay, you have to rewatch it because from there I said you determine your IF from a higher time frame perspective. There is no lower time frame PDR that is going to make price to go against what the higher time frame is doing. All right, because normally if you get stuck on a lower time frame, you might feel like, okay, price was on a downtrend and then it broke structure and it wants to go back up now, right? You start buying all the lows here. Not you, if you are negligent, if you don't check the high time frame, there might be a bearish order block that price was just pulling back to. And since you are not aware of it, price will hit the bearish order block, come down, and then at this level, you are still looking at your order block to enter and hoping for price to move up. And maybe from there, price will just drop drastically down, clear, stop loss clear, and you'll be wondering what happened, why price did not respect. This is because price was respecting a higher time frame PDRA. Okay, price was respecting a higher time frame PDRA. Like I said, you determine your order blocks from higher time frames. Okay, you determine your order blocks from higher time frames. So there are so many things that you look out for to know which order block is strong and which one is not strong, right? The first thing on it is price should break structure. You have to have a BMS, right? Price should have to break structure in the direction of which you want to take the trade in. Okay, once it breaks structure in that direction, that's all that you need as one confirmation. When it breaks structure, and now again there is a manner at which it breaks structure. If it breaks structure with an impulsive move showing a sponsorship, that is another huge confirmation, all right, for you there. When it breaks structure moving at a speedy way, it shows that the institutions are selling or buying in that particular zone. They bought or sold in that particular area. All right. And so when the market comes back to mitigate the orders of the institutions there, price will continue to drop or buy, all right, depending on which order that was. All right. Like I said, this is just a quick example. Price break structure here, and this is the last down closed candle before they moved that broke this structure here. So you see price came back to it, and then we continue the up movement. Right, that's how this was just one confirmation. And then price, after printing this bearish order block, this bullish order block, we had an impulsive move up that price even left an inefficiency. Okay, price even left an inefficiency down here. All right, this is a rapid move up, creating an imbalance. All right, this means that the institutions are buying. Okay, the institutions are here are buying. All right, now in the forex market, I mean, like almost everybody have their own way that they read price. All right, many have their own way that they read price, or other blogs they have their definitions to most of the things. Like, the most important thing for you to do is to be able to identify something, all right? To be able to identify the PDR that you need, like this other block. That's the reason why I said I don't want to start complicating you, like telling you that, okay, in this candle, the institutions, they bought and they sold at the same candle. And as they bought here, as price was going up, they sell orders that they also sold here, they were in a negative, right? And as price went up, their sales were in a loss. And when price gets to a level, they come back, they push back price down to close their sell positions. And when they close their sell positions, they add more buys to it. All right. That's one explanation of order blocks. All right. That's one explanation of order blocks. All right. Now, another explanation is that inside this candle, the institutions bought here, and we know that there are people that have a lot of money, right? The institutions, there are people that have a lot of money. They are the big guys in the market. So if they have, like, let's say they want to enter this trade, all right. Let's say they want to enter it with 1 million lot, all right. Actually, the 1 million lot will not be able to fill in, all right. So they'll be able to enter in with a 0.5 million lot. All right, they enter half of their position here, they push price up, and then as price goes up, comes back down, they enter another half, right? And then price continue to go up. Those are the explanations, right? Every one of them is right. Okay, every one of them is right. But like I said, the most important thing for you is to be able to identify the other block and to be able to validate it, if it is right or wrong, if this is a good order block or not. Okay, that's the most important thing for you to do. Be able to identify if this order block is good. Is this a good order block? This one broke structure here, came back to the other block, and then went up. You see series of bullish candle even creating an inefficiency. This shows sponsorship. It shows that the institutions are involved. right? So, and then price push up. Now, again, here you will notice that as price went far up, upon coming down, this should have been a bullish order block. This is another bullish order block. All right. This one already has been mitigated. Okay. So now when you extend this to the left, to your right, and you're like, okay, price should react to them because this one broke structure, this one broke structure, even from right from here. So you are expecting price to start buying from here or from here. Now, price just went down through it. What will be the problem, right? You need to know you have additional order flow like the back of your hand. Why was price even going back up? All right. Why was price going back up? When you ask that question, you will know when price, as price was going up, you will know when it has to stop going up and continue the down movement. All right. Now we notice that if we go to a higher time frame, we are going to see this very much clearly. Let me do this here. I want us to go to the monthly chart. Okay. I want us to go to the monthly chart. Now, when you look at the monthly chart here, you'll discover that price was actually not in any buy, or the price was not in an uptrend. Okay. Price was not barely in any uptrend. And then when you look at the weekly, you will discover that the movement of price, okay, as price, this pullback here, this pullback that we're having at this level, let me mark that correctly. This pullback here was just to mitigate this bearish order block. Okay, we're having a very nice bearish order block here. So you see, price was coming back for this bearish order block for you to sell. All right. So any bullish order block standing against this one is a fake one and it's a scam. It's going to take your money, all right? So you have to know it's not order flow to the back of your hand so that you don't make these type of mistakes, all right? Because the people that know the IUF correctly, they're going to be selling from here. And where will their targets be? Their target will be here, down here, and so on, right? And now you are standing against, you're like catching a falling knife, or you're standing against a train. All right. And it's very dangerous. It's very, very dangerous. All right. So you have to study your IAF completely so that you know that, okay, this other block is going to work, this one is not going to work, and these are the reasons why this shouldn't work and this one should work. All right. Those are the things that you have to consider anytime that you want to take your trade. Where is price going to? Why did price came to this area? All right. You need to know all those things. Like I said, now you don't have to log focus only on one time frame. Okay. Determining your IUF starts from a higher time frame, monthly, quarterly, yearly, and also all those things. Right. You have to start right from a higher time frame. Let me even show you something. Okay. This is Euro USD. I want us to look at the one year chart. Okay. I want us to look at the 1 year chart and you notice something here. Okay, no, let's think that is on DXY. Okay, yeah. Right. This is the dollar. This is the dollar. Now, when you look at my chart here, you discover that this is what? This is a bearish order block, right? This is a yearly bearish order block. So price traded into a yearly bearish order block on DXY. And it started rejecting. You see it broke structure down here. So immediately when you just look at this, you know that as price is inside this bearish order block on DXY on a 1 year time frame, whatever happens, price is going to give a reaction. All right. And you will know that at least for some months, you are going to be bearish because this is coming from a higher time frame. Okay. This is coming from a higher time frame. And so now when you go to a time frame like, let's say 3 months, okay, when you go to a higher time frame like 3 months, you notice how a full 3 months bearish candle has formed, which means that just as you notice price hitting a yearly candle, a yearly zone, right, in a yearly bearish order block, if you have an entry here, you can hold for a long time, right? So those are the things that you consider. It is just a reminder that you have to look at your higher time frames because you might have a higher time frame trend like this, and price is pulling back up to either a fair value gap to continue selling, and you will feel like, okay, let's say this is going to be the 1 month chart. This is the 1 month chart, and when you look at the daily, at this level, you see that the daily is giving you an uptrend. With this uptrend, you should not be confused and only start looking for buy opportunities. You need to know whether the higher time frame, why is price going up to on a higher time frame? Because this on a higher time frame is just a pullback, but on a lower time frame, you're having a complete trend. Yeah, you're having a complete trend. So price will come back to the higher time frame PDRA, all right, either an order block or bearish order block, and start to sell. When you start to sell here, know that all the other blocks that were formed here on the daily or other smaller time frames, they're just going to be inducements. They're just going to be grabbing people's money and so on. People will be buying here thinking that price should go up, continue dropping. All right. So you determine your other blocks from a higher time frame. Like I said, price might be buying seriously and you feel like, okay, price is going up, price is going up. You are not aware that surely maybe price is heading to another block on a higher time frame. You get lost on a smaller time frame. There are some times that you will even be buying inside. You can see this break of structure, and then you'll be buying this other block here, hoping for price to go up. And meanwhile, price is inside a bearish other block on a higher time frame zone. So what do you expect from here? Your stop loss will get slammed, right? Immediately, and you'll be like, what is going on? Is it news or whatsoever? So always try to determine your other blocks, your fair value gaps, your IOF on a higher time frame. Okay, you determine it from a higher time frame and then you go down. Now, like I said, on the other block, you need to have a key level. When you have a key level like this, you have, let's say you have support and resistance. You have your support, you have your resistance. Okay, at this level here, the last down candle here that forms when price drops down to this level, okay, when it drops down to the support level, the last down close candle here that taps into this key level. Now, the validation for this candle, all right, the validation for this candle is going to be when a previous candle takes the high of this candle. That's going to be a bullish validation, all right? When the next candle closes, this is a down close candle. This is a down close candle, which means that the next one has to open somewhere here. So when it opens and then it trades and break the high of this candle, that is a bullish confirmation, right? That is a bullish confirmation that price wants to go up. Okay, that price wants to go up. So how do you enter your trade? How do you enter a trade? Now, there are so many ways to enter a trade using another block. You can decide you use the high of the candle. Some people, they use the open of the candle, all right? People use the open of the candle. Let me change this body to a different color. Let's put it this color, right? Some people use the open of the candle. Some people use the 50%. Some people use the 50% of the other block, all right? So there are so many ways you can enter. It's based on you to backtest and see which one is good for you to enter, right? I personally enter from the open of the other block. Now, like I said, when price, this is the last down close candle here. So when price validates, when price breaks the high of this previous candle, of this down close candle, this now becomes another block, right? This now becomes another block. Now, this only these two candles, let's say they are formed on the weekly chart or on the daily chart. If you go down to a smaller time frame, you are going to see a structure that was down. You are going to see something like this. Price left that zone and it was creating higher lows, lower lows and lower highs, and then it hit this area, all right, and then it broke structure, right? From here, you see a break of structure, all right? As this high, the high of this candle is going to be a high here that's been broken, okay? So how do you enter your trade now, all right? How do you enter your trade? When price breaks a high like this, you wait for a retest, okay? You wait for a retest and then you buy. You buy from a retest of that other block. This price is coming back to mitigate the orders here. That's where you buy at. So what next is, this is a bullish candle. So the next one opens somewhere here. Okay, it can open, maybe close a doji candle and so on like that. And then let's just say can open and then close something like that. Okay, and it even creates a BC. It even creates a BC somewhere there. All right. And now what I'll be expecting, I'm just expecting price to come down to the other block. All right. So this one closed this type of a doji, and then the next one opens. This is now a bearish candle. Okay. This is now a bearish candle, same as this one down here. Okay. So now my entry here is based on this open. Like I said, the open of this candle. That's where I'm going to enter, and my stop loss is going to be at the low of the candle, and my take profit is going to be at the next key level, right? The next zone where there is liquidity. Okay, so at this point now, this is my entry. I'm waiting for price to form and then come back into it. Now the next candle can open here. All right, it trades down into my entry, and then it goes back up to close somewhere, right? So how will that look like? Price open down here, come right down to my entry here. Okay, comes right down to my entry, it activates me, and then it pushes back right up to close somewhere up here. Okay, that's how price moves. Can even have a long candle like that, something like that. Okay, so this is how you trade other blocks. What I'm doing here is just an opposite. You can do it the other way around. Okay, so this is how I trade other blocks. And for me to buy here, I need to know why I'm buying. I need to know where price is going up to. There could be some equal highs that were sitting above this area, and then I'm targeting them that, okay, price should come back up and clear them, right? And that will be where I'll put my take profits, all right? So guys, I don't want to make this video to be too long. Okay, if we are going to make, I'm going to make a video again, all right, in the future, that will be able just to crack down this other block theory. But for now, we are under IOF series, all right? And I was just trying to make you understand that if you are in a bullish IOF, expect bullish order blocks to work. If you are in a bearish IOF, expect bearish order blocks to work. All right, you don't expect bullish order blocks to hold while you are in a bearish institutional order flow. It's not going to work. Okay, it's not going to work. All right, if price is going up, don't be expecting bullish order blocks, bearish order blocks to be holding price down. All right, it's not going to work. It's not going to work, guys. It's not going to work. All right, so those are the things that you have to look into. Like I said again, if your IUF is down, price is heading for sell side liquidity, expect all the bearish PDRs to be effective to hold price. Okay, so the market should not be going down, and you are looking for a bullish order block here to buy from. It's not going to work. Price is just going to clear it, continue going down. You want to buy, they just slam through you, and so on. So determine your IAF, and then now you'll be able to use the theory of the other block I just shown you, and to be able to follow the IAF, right? So that is it, guys. Try to backtest more. Backtest. The IAF video is still on. I'll put the link on the description below. All right. So the only way to help you master this is to backtest. All right. Backtest. There'll be the link for a free Telegram channel where I send most of the setups, most of my chart analysis. You can see there and you learn a lot from them. All right. It's a full catalog. You can have more than thousands and thousands of charts that I've done over the past years. You can look at it and you see how I annotate my charts, how I study my charts, and so on. Okay. So try to backtest. If you have any questions, leave them on the comment section below. If you like the video, this is Premier. If this is good knowledge for you, you can give a like, you share, you comment your thoughts, the video you're expecting next, so that I'll make that available for you in our next episode. Right? Thank you guys. If you haven't subscribed, consider subscribing so that you'll be notified whenever I upload such content for you. Okay, so thank you for watching right up to this moment. See you next time and have a good trading.